You're with us on Editor's Roundtable. So what has this 50% tariff on India meant for the market and what lies ahead? Let's take a look. Now, first of all, let's look at the 50% number itself. India has been handed out the highest tariffs in the world, next only to Brazil. And it's not as if we're running the highest trade surplus with the US. I mean, look at, that's why I put up this number. These are some of the trading partners of the US which are running very high trade surpluses. In fact, look at China, I mean, 296 billion. Vietnam is at 123. The trade deficit the US has with India is just $46 billion. Despite that, our tariff at 50% is obviously among the highest in the world. So that's point number one. Now let's move on and talk about what has happened, because geopolitics has become very, very interesting and very, very important. What has happened so far? In the last 24 hours, what we've heard is that Mr. Trump has said that there'll be no further negotiations with India till issues are resolved. He seems to be pointing out towards the Indian purchase of Russian oil. Number two, we know for a fact, with confirmation coming in from Mr. Doval, that the Russian president, Mr. Putin, he's going to be making his way to India. Very, very important development as well. Number three, we've seen a conversation, a phone conversation with the Brazilian president and Indian Prime Minister. And talks were apparently covering a whole range of issues, including, of course, tariffs. In fact, Mr. Lula is expected to make his way to India on a state visit in 2026. And number four, Prime Minister Modi himself is going to be traveling to China for the SCO summit. And this is assuming a lot of significance, because in all probability, he will be holding a bilateral meeting with his Chinese counterpart. And this is the first meeting in many, many years. So the voice of the BRICS seems to be rising again. These overtures are very significant and important. Now, the market is in a wait-and-watch mode. It is waiting for a breakthrough. First of all, in that meeting between Donald Trump and Mr. Putin himself, because if that happens, then the market's hope is that at least that additional 25% tariff, that perhaps can be knocked off. But it's a if at this point in time. So what does this mean for the market? Let's look at some numbers. The Nifty is down about 1% this week. The mid-cap index has fallen about 1.5%. Now, what happens if all of India's exports get tariffed at 50%? Morgan Stanley has done an impact analysis, and they're saying is if everything is tariffed at 50%, then the impact on GDP growth is going to be 120 basis points. But if the exempt categories, such as pharmaceuticals and some electronics, if they continue to get those exemptions, then the impact on GDP growth is going to be lesser, only 80 basis points. Now, why is the market so worried if the GDP hit is only 80 basis points? Here, the answer comes in flows, and the picture on FPI, inflows and outflows is not looking very good. In July, we were out by almost 18,000 crores. So far in August, 12,400 crores. And so far in the calendar year overall, we've seen outflows of over 1 lakh crores so far. So that remains the biggest concern. Something highlighted by Novama in one of their notes. I'm just recapping that for your benefits. For instance, this one brokerage says that the capital flight is likely to weigh on the SMID space, in particular small and mid caps, and that remains the biggest risk for the market. And Ravi, that's really my question to you. FPI outflows, is that a new risk? Ravi, yeah, that question to you. FPI outflows, I mean, we'd want to wish it away, saying domestic inflows will counter it, but could it still be a new risk the market has to look at?
No, clearly they have, FPI flows have not stopped going out. And there was for a brief moment, there was a period where it looked like the US exceptionalism was ending and money would flow towards emerging markets. But what has happened is money has flown towards selective European market, selective Asian market, not as an emerging market overall. So India got money in one particular month. I think in the month of April or May, it got big flows. Yeah. But after that, again, it's the same thing. And relatively, India's position has worsened in the trade war. So that has led to the outflow. So I don't think we are carrying a huge amount of FPI risk, FPI outflow risk, because their holding has come down from 24% to almost 16%. And can it go down to 15, 14? Sure, it can. But it's not going to be the same as 26 coming down to 15, 16. So I think it's less of a risk, but we are lacking triggers. We are not the most attractive bride out there.
Well, let's talk about what can make the bride attractive. You mentioned one attractive piece, which is the solar space. What else?
I think reforms. Reforms is what is needed. We need to press the pedal on reforms. We cannot be expected to, continue on this trajectory. India as a story always has had big bang reforms at a regular interval for it to carry the momentum forward. And I think it's been a while since we have had that. So, and if we are not going to provide a demand side stimulus, at least unclog on the supply side as much as possible and make it attractive for the money to come in. So, honestly, that's what reforms would what make it Indian market attractive.
Two, three things that you can mention, that you are looking forward to in terms of reforms, which can really just change the dynamics and put India on a radar.
So on the access to the market side, we need, actually it was our need. So a lot of people say that, the current GDP, not much impact because of trade war. No, that doesn't matter. What matters is we are all counting on us going from, being a 1-2% of the global trade to 5% of the global trade. And if that was to happen, we have to be part of the trade agreements with the largest market, which is US and Europe.
Yeah.
So it is the future growth that is impacted, not the current GDP that is impacted. So we need to become part of those trading blocks. We need to unclog the regulatory jam that we are seeing in a lot of areas, and especially the legal reforms that need to happen. I think there is still a lot of scope for infrastructure improvement and making the processes. I mean, I'll just give you one example from our industry. An FPI wanting to come in still has to fill in a lot of
yeah, they always talk about that.
Even in a gift.
No, even in NRI is struggling to invest into India market. There is a lot of regulations and a lot of checks.
There is a lot of scope for efficiency and productivity improvement. I mean, let me not get into the detail of it, but clearly, I think we are not at par with the rest of the countries who are trying to attract capital. We have to be better than them.
Point well taken, well made and well taken, Ravi. But I mean, these are obviously, they'll happen over time, over medium term, or even if they happen now. I mean,
it needs to happen now.
But as we wait for this to happen, right now the market's big hope is festive season. Consumer recovery, rural recovery, festive season recovery. Do you believe all the corporate commentary that you're getting around this?
No, I think there is going to be some pent-up demand. And again, I do feel that what might disappoint is the extent of recovery. There is going to be a recovery for sure. But is that, will we go from being a 6% growth to a 6.2, 6.3, or is it going to be a 7% growth? That can make all the difference in what kind of...
Which one do you think will it be? Will it be meaningful recovery?
No, I don't think so. I don't think it will be a meaningful recovery. Across the board, not for sure. In bits and pieces and in some sectors it might be good enough. I think we need to let some more time pass and let some time correction happen before we start seeing a new move in the market.
We didn't ask his favorite sectors beyond solar.
No, we asked.
Anything else? Final advice? Any other sectors? Anything interesting you're watching out for?
No, I think the push from the regulator side has to be on increasing the credit growth. And we cannot have 9% credit growth. We cannot have a nominal GDP growth rate of 8%, 9%. We need to be growing at 10, 11% in terms of nominal growth, and we need to have credit growth which is 13, 14, 15%. It will take time. Good thing is the steps have been taken, and some more incremental steps should be taken probably. But it is not lost on whether it is the central bank or the government. It is not lost on them. But it's just that we as a market participant are a little impatient. We want these things to happen sooner.
Yeah, I think to sum it up, given that this week is when India bounced back in the test match, I think the wicket is looking a little bit tricky. We can't go for those big hits. Maybe spend some time in the center, let's see that ball a little bigger. Tug in there the 1 and the 2s, and then in fact, as we are informed, then the big hits will come.
Yeah,
so I think your
chance will come.
Your chance will come. That's what you stepping out to, on a green top is going to be very, very difficult. But just thought we'll wrap it up on that note.
That's a good analogy. Preserve your wicket, take in the singles as you get, and then wait for the big hits. Ravi, great to have you in our newsroom. Hope to see you more often over here. Thanks very much for joining in. Well, with that, it's a wrap from this entire team that puts the show together. Thank you so much for being here with us. We'll see you bright and early with the markets on Monday morning. Till then, keep watching CNBC TV18.